All right. Good morning, brothers, and welcome back again to the UK live session. It is 3 a.m. Eastern now, almost, and let's get started. I think we've got quite a few number of trade setups to be discussed, beginning from the euro. So let's start off with a slightly larger time frame. In fact, if you have been subscribed to my Telegram channel, there are actually 6 trades that we have been working upon. Uh, I would like to touch them all here. So let's get started off with euro. The daily chart is almost unchanged for now. We are waiting for the smaller time frame to produce a bit reaction. Uh, Especially on the 4-hour chart. If you look at the trend lines, there's not much change, but the only significant change or a bit significant change is that this trend line, which was back tested already, is beginning to provide some room on this outside now. So uh, the wave structure, please, that's the boundary which is being worked upon, no doubt about it. That's wave 1 or maybe wave A. If it is going to produce a corrective drop ABC, this is wave A, and or it's going to be wave 1. Those are the two major probable counts here, followed by a retracement which normally takes three waves. I think it's wave A, and wave B is being worked out. It could work out as a flat, or it has already formed, right? But the way prices are stalling right ahead of the previous top at 1.1860, it could be a flat in the making, brothers. Absolutely, the chances are increasing for a flat in the making. And we just got we was we were suggesting stops at 1860. It made a high at 59. If you are still in the trade, you might want to push your stop maybe 65, or you may remain at par, no problems. But watch out for a potential flat being worked out over here, and that should be followed by wave C, which should ideally equal wave 1 under normal circumstances. Alright, so still euro should be looking good on the short side until prices remain broadly below 1.1860, and that's what is the case till now. Alright. So in the next chart, please. I think we'll touch upon gold now. Overall wave structure, wave count in gold remains unchanged for now. We are working on 5 down already. That is that can be labeled clearly as wave A, capital A, I would say, and then capital B. It's either capital B formed, or it could be a flat formation in process, which can test and finally form the capital B around the 13 of 6 mark. But I'd like to also reconfirm that the movement after recent lows or the past lows at 1260 has been 3 and a potential ending diagonal 5 waves. So if prices are not able to break above 1297 over here, then we should be seeing gold dropping from here itself. All right, and what confirms that? Let's say a break below 1285. Let's go on an hourly chart. You can see there properly. So these two are the levels. Break about 1297 will definitely push prices to test maybe 1305, 1306, and on the other side, if it breaks below 1286, I think top is in place, and the next wave count would be wave C unfolding, which should ideally unfold into 5 waves. We might have bottom wave 1 in place, and wave 2 as well, giving enough room for waves 3, 4 and 5 to develop on the south side. The only problem, or it's not a problem, but the only timeline when it comes to the last trading day of the week. Today we are entering Friday, early hours of trade, and then we go into the weekend, come back 27th of November. That brings us to 4 trading days. So what I'm trying to hint is that as we move towards the month end or the end of a series, prices tend to form series highs and lows, which are mostly held across the series as well. All right, so maybe that could be one of the reasons why prices are being held on to here. December, I think December should be well sell off for gold. So just hanging around for a few more trading days maximum. Uh, if it is wanting to trade in this range, let it do so. But selling on rallies is very much on cards, and it remains a normal trade strategy for all of us. All right, you might want to place your stop loss to be on the safer side above 1305, 1306. It doesn't play much sense to place it anywhere higher right now. If price action is changing, we might change our stop loss. Maybe we can get triggered off as well, but that doesn't mean we change the trading style. We don't want to go long at all at this time. It looks very good on the south side. In fact, it looks excellent on selling on rallies. If you want to look at the MACD RSI as well, there you see 4-hour chart MACD looking very tired actually. Let's zoom in a bit. Yeah, there you see. And this is what I like about the RSI reversing from 65. But believe it or not, brothers, these two oscillators, these two brothers are not very good when the market is actually drifting sideways. So in a trending market, it's a different story altogether. Daily chart looking good, isn't it? 55 the RSI, and the MACD is also looking to carve out yet another crossover below the zero line. And that makes a lot of difference. All right, let's move on to the next chart. And that is dollar index, no doubt about it. About the bullish divergence is still coming into play, is still coming into picture, and you know what, even if it drops one more time, I mean one more low, it's perfectly fine. The reason being the entire rally uh, see, has been supported well at the 50% mark, also very close to the previous wave 4, not exactly the previous wave 4 that terminated somewhere around 92.80 if we count waves properly, but in the vicinity of the previous wave 4. So probably the area where support was expected, and that's why the trading range suggested was around 93.20-25 through the 92 60-80. That's the buying range. That was precisely the range suggested to buy. So 50% longs have already been taken in. Even if it drops a bit more lower towards 92.80, that is a good sign for us. Believe it or not, the MACDs and the RSI, the oscillators, are still favoring a good bullish divergence scenario. There you are. Crossover on the north side, very much possible, brothers. So euro crossing over on the south side, dollar index crossing over on the north side, gold crossing over on the south side again on the 4-hour chart. These are all meaningful indications that the trade direction which we have taken is in line with what is happening on the charts. Okay, if we get stopped out of euro, just in case, about 1860-65, looks unlikely, but if it does stop us out, then we will be looking into selling further on rallies. That on a very smaller time frame, that would be the first leg in retracement, and could continue dropping lower. Watch out for a break below 1830 for an accelerated drop towards at least towards 1750, or a test of 1700 levels. A quick 150 pips drop cannot be ruled out. All right. Now, if we would like to go on a crude oil chart, which I was wanting to discuss since last two sessions now, if we look at the daily chart, just wait for 1 second and look at this oscillator. It is a clear bearish divergence being identified on the daily charts. You need to pay some attention here. Prices rallying towards new highs, and oscillators are indicating bearish reversals or divergence, sorry. And if you look at the wave count as well, let me take you guys on the weekly chart. We need to compress this some more. Okay, the entire drop, I'm cutting short of the past wave, the entire drop from 110, okay, just pay attention on the wave count here, unfolded into 5 waves, 3, right, which was it needs to be unfolding into 5 waves now. 1, 2, 3, and within the third wave, that was wave 4, and this rally, or this counter trend rally, is being worked out as wave 4 of one larger degree. Right, so you got 1, 2, 3, and then wave 4 of the same degree is being worked out. Normally the fourth waves would want to terminate somewhere in the vicinity of the past fourth wave, which it is already entering. All right, so looks very close to a top forming. Please watch out for a good bearish reversal, and what we saw just now a couple of minutes back was a good bearish divergence being produced on the daily chart as well. Another correlation wave 4 would want to terminate at a 38.2% of wave 3. Alright, so in a nutshell, if you are wanting to play crude, watch out to go short around these levels. Reversals are due any moment. I think if you look at the 4-hour chart or even lower, the rally from 55 to 58.50 has most likely unfolded into 5 waves as well. Wave 1, wave 2, wave 3, wave 4 and wave 5. Yeah. So that is also looking to be complete. So if you are an aggressive kind of a trader, we've already suggested shorts from 58 sort of levels. It's trading around 50 points higher. So if you are an aggressive kind of a trader, go short right now with a stop around 61.50 or 62. This is definitely a swing trade. Allow prices to reverse if you are a conservative kind of a trader, and let it drop below 54, and then you can go and sell on rallies. All right, we have already entered shorts aggressively. We would like to take some profits, soft profits around 55. All right, we're also trading Bitcoin, suggested to go short, and GBP USD also suggested to go short. I'll be touching base upon those in the next session probably. So that's it for now on the shorter time frame and the swing trades. Do write to me at Japee at yahoo.com for any queries. And do subscribe to my channel here if you like it, and do spread the words, brothers. We are sincerely wanting to build a trading community for ourselves. So if you liked it, or if you think that it's of any help to those who are trading, kindly spread the word. I mean, and God bless you. Japee is my free Telegram channel, which you can subscribe for the live trade setups and the live trade updates as well. I normally be here twice a day. The UK live 3 AM Eastern, and the New York live 8:30 AM Eastern. During the weekends, I would like to upload some videos where we discuss the wave principle. Alright, so next I'm scheduled around 8:30 AM Eastern to catch up with you in the New York live. Until then, once again, thank you for your time being online here, and till the next session, good luck to your trades, brothers, and may God bless you all. Thank you.